Welcome back to our channel, where we will be diving deep into the terminologies that are essential to help you get ready for your financial certification exams like investment funds and Canadian securities. Whether you're gearing up to tackle your exams head-on or just looking to boost your financial vocabulary, you're in the right place. Don't forget to hit that subscribe button and ring the notification bell, so you never miss an update from us. As always, remember to like, comment, and share your thoughts. Now, let's begin. Gatekeeper. Gatekeepers in the financial industry refer to dealers and all of their employees who have the responsibility of safeguarding the integrity of the markets by preventing potentially illegal activities carried out by clients. The Universal Market Integrity Rules establish specific regulations and guidelines that outline the gatekeeper function and formal reporting procedures. Glide path. A glide path refers to the changes in the asset allocation mix of a target date fund over time. These funds typically follow a growth strategy in their early years by holding a higher proportion of risky assets, such as stocks. As the target date, usually retirement, approaches, the fund gradually shifts its allocation towards less risky assets, such as bonds and cash. Importantly, these adjustments are made by the fund manager without any action required from the fund holder. Global macro strategy. A global macro strategy is like an investment approach that considers the big picture of the global economy and major geopolitical events. Investors using this strategy analyze how government policies, economic data, and global trends might affect different asset classes. They then make investment choices to potentially profit from these broad economic shifts. It's a strategy that aims to capitalize on macroeconomic trends that can influence markets worldwide. Good delivery form. When you sell a security, you need to ensure that it is in good condition, has the necessary endorsements, and any interest coupons are included if relevant. To make this process more efficient and avoid complications, most securities are held in the custody of the broker, who manages these aspects of delivery when securities are bought or sold. This ensures smooth and proper transactions in the securities market. Good faith deposit. A good faith deposit, also known as a performance bond or margin, is a sum of money deposited by either the buyer or seller in a futures contract. This deposit serves as a financial guarantee, indicating the commitment to fulfill the contractual obligations of the futures contract. Good through order. When you place a good through order, you are telling your broker to attempt to execute the trade within a certain period. If the order is not filled within that time, it will be voided. This type of order allows traders to specify a duration for their order, ensuring that it remains active only for as long as they desire. Goodwill. Goodwill represents the intangible qualities and assets that contribute to the overall worth and reputation of a business. It includes factors like customer loyalty, a strong brand image, and a skilled workforce, which may not have a specific dollar value but are considered valuable assets when evaluating the company's overall value. Goodwill is recognized in a company's financial statements when it acquires another business at a price exceeding the fair market value of its identifiable tangible and intangible assets. Government securities distributors. Government securities distributors are usually investment dealers or banks that have been authorized to participate in Government of Canada debt auctions. These entities have the permission and capability to place bids on government securities on behalf of their clients and themselves. In simpler terms, government securities distributors are financial institutions that can actively participate in the purchase of government bonds and other debt instruments issued by the Government of Canada. Green sheet. A green sheet is an information circular prepared by dealers, primarily for internal use by their sales representatives. It serves as a tool to highlight the key features of a new issue, providing both positive and negative aspects. This helps sales representatives effectively communicate and solicit interest from the general public for the new issue. In simpler terms, it's like a briefing document created by dealers to equip their sales teams with essential information about a new financial product or offering. The green sheet outlines the pros and cons of the investment, helping sales representatives present the opportunity to potential investors more effectively. It is typically an in-house resource used to facilitate the sales process for new securities. Greenshoe option. A greenshoe option is a provision used to stabilize the price of a recently issued security in the aftermarket. It allows underwriters or dealers involved in the initial public offering to purchase additional shares of the security from the issuer at the offering price. This option can be exercised if there is strong demand for the security, causing its price to rise above the original offer price. In simpler terms, the greenshoe option provides a safety mechanism in IPOs. If the market price of the newly issued shares goes up significantly, dealers can exercise the greenshoe option to buy more shares at the original price, helping to balance supply and demand and potentially preventing excessive price volatility. It's like a tool to manage the market price of a newly issued security during its initial trading days. Gross Domestic Product, GDP. Gross Domestic Product, GDP, is the total value of all goods and services produced within a country's borders in a specific time period, typically a year. It serves as a comprehensive measure of a nation's economic output and activity. Gross profit. Gross profit is the money a business has left over after subtracting the cost of goods sold, COGS, from its total revenue. In other words, it represents the profit made from selling products or providing services before accounting for other operating expenses, such as rent, wages, and utilities. It's a key financial metric that shows how efficiently a company is generating profit from its core operations. Gross profit margin. Gross profit margin is a profitability ratio that indicates the company's profit rate after accounting for the cost of sales. It is calculated by dividing the gross profit, revenue minus cost of sales, by the total revenue and then multiplying by 100 to express it as a percentage. In simpler terms, the gross profit margin reflects how much profit a company retains from each dollar of revenue generated after considering the direct costs associated with producing or delivering goods and services. Growth industry. A growth industry is a sector of the economy where both sales and earnings consistently increase at a faster pace compared to most other industries. This rapid expansion is typically driven by factors such as increasing consumer demand, technological advancements, or emerging trends. Companies operating in growth industries often experience higher revenue and profit growth, making them attractive investment opportunities. In simpler terms, a growth industry is like a segment of the economy that is booming, with companies seeing substantial increases in their sales and profits. These industries are often characterized by innovation and high demand, driving their growth rates above average. Growth stock. A growth stock refers to the common stock of a company that is expected to have excellent prospects for above-average growth. These are typically companies that are projected to expand and increase their earnings at a faster rate than the average for the overall market. Investors are drawn to growth stocks because they believe these companies have the potential to deliver substantial capital appreciation over time. In simpler terms, a growth stock is like an investment in a company that is anticipated to grow and perform exceptionally well in the future. These companies are often seen as having promising opportunities for expansion and may not pay large dividends, as they reinvest their earnings back into their business to fuel growth. Investors buy growth stocks with the hope that the value of their shares will increase significantly as the company continues to grow. Guaranteed amount. The guaranteed amount is the minimum sum of money that will be paid out under the terms of death benefits or maturity guarantees specified in a segregate fund contract. This ensures that the investor or beneficiary will receive at least the specified minimum amount, regardless of how the investments within the segregate fund perform. In simpler terms, the guaranteed amount serves as a financial safety net, assuring that there is a minimum payout established in the contract, providing some level of financial security to the investor or their beneficiaries, even if the investments in the fund do not perform as expected. Guaranteed bonds. Guaranteed bonds are bonds issued by a crown corporation, which is a government-owned entity, but these bonds come with a guarantee from the relevant government regarding interest and principal payments. This government guarantee provides assurance to bondholders that they will receive their interest payments and the return of their principal investment as promised, even if the Crown Corporation encounters financial difficulties. In simpler terms, guaranteed bonds are considered safer investments because they have the backing of a government, reducing the risk of default for bondholders. This government guarantee enhances the creditworthiness of the bonds and makes them more attractive to investors seeking lower-risk fixed-income investments. Guaranteed Income Supplement, GIS. The Guaranteed Income Supplement, GIS, is a pension provided to recipients of the Old Age Security, OAS, program who have little to no other sources of income. It is designed to provide additional financial support to low-income seniors in Canada. This is a government benefit aimed at helping elderly individuals who have limited financial resources and are primarily dependent on OAS payments. It ensures that those with the greatest financial need receive extra assistance to help them maintain a basic standard of living during their retirement years. Guaranteed Investment Certificate, GIC. The Guaranteed Income Supplement, GIS, is a pension provided to recipients of the Old Age Security, OAS, program who have little to no other sources of income. It is designed to provide additional financial support to low-income seniors in Canada. This is a government benefit aimed at helping elderly individuals who have limited financial resources and are primarily dependent on OAS payments. It ensures that those with the greatest financial need receive extra assistance to help them maintain a basic standard of living during their retirement years. As we wrap up this session, we're thrilled to have embarked on this journey together, exploring the foundational terminologies crucial for acing your financial certification exams, including investment funds and Canadian securities. If you found our insights valuable, remember to show your support with a thumbs up and extend the knowledge to your fellow learners. We trust that these insights will prove indispensable on your road to success. Stay tuned for more enriching content, and remember, your financial expertise is just a click away.